Guys, what's going on? My name is Ryan. I trade ETFs and I like to make videos on the technical analysis that I'm seeing in the charts. So today we've got natural gas here and we are seeing some insanely interesting moves going on. For example, here in the after hours, we are up almost 3%. If you're playing UGAS or DGAS like I am, that marks a 10% move for the price action tomorrow in each of those, and I think that this might only be the beginning. So here with NATGAS on the weekly chart, we can see some very interesting similarities in previous years. Many people have been calling this as a head and shoulders, which it very well might be. However, I think there's reason to believe that it might be something more. I think that it might be a diamond continuation, and we see an almost identical pattern here back in 2013. And we have another diamond pattern here in 2011. And what's interesting in that is each of these has an 8 touches in the diamond pattern, and we'll get to that in a second. But I just wanted to point out this long-term channel that we've been in and how this channel comes into play here. So we can see that we have support, resistance, support, resistance, support, and this will be our next resistance level. That is why I primarily have reason to believe that we might move up higher, is that in the last 6 times that we've made a move to the other side of the channel, it's basically been a very directional straight line up, straight line down, straight line up, straight line down. You haven't seen us come halfway up and then move all the way back down in the last 7-8 years of trading. So let's compare these potential diamond continuation patterns. So over here on the left, back to the 2013 one, we have a 1, 2. We have our price coming in. We have a 1, 2, 3, 4, 5, 6, 7, and 8 before we decide to break out and move higher. And what do we have over here? We have a 1, 2, 3, 4, 5, 6, 7, and I think that we may have just set in our 8. What are these blue dotted lines? These are the measured moves from the diamond pattern. So if we clone this, we bring it to our point of breakout, this marks basically the high of our measured move. What's interesting though in this situation is that we're able to predict our support as well. So if we take this to when we rose into the pattern, this marks our absolute bottom. And that's interesting because the same situation is taking place over here. If I deleted these two, I've drawn the highs to the swing lows. If we clone this, we bring it down to when we came into the price action, the measured move is basically our bottom over here. If we clone this, bring it to a potential point of breakout, this would be our measured move over here at the 4.5. I have no fundamental reason to believe that we're going to move to the 4.5. I do pretty strictly technical analysis. However, that's what I'm seeing here in the charts. And I'm sure that over here a lot of people were calling a head and shoulders on the price action as well. So let's move on to the daily, to the weekly, and we can see that price, I've drawn 3 clones of a kind of a curvature pattern here that we've been seeing. And I just like to use this as visualization to mark the midpoint in a move and the extremes of a move. So extremes would be touching this bottom line, and extremes would be touching this top line, and this middle move is basically this no trade zone. So we are in the bottom middle in between our extreme low and our middle point right here. There is a bit of a trend line intact here. An interesting thing on my oscillators that I'm liking, which makes me somewhat stoically bullish on the price action, is what I think is a hidden bullish divergence potentially. And the fact that this is on the daily chart is very interesting to me because daily charts and divergences on daily charts are sometimes hard to spot, and they have a lot more momentum and power beyond them as opposed to where I usually find divergences, which is on the hourly time frames. So what is a hidden bullish divergence? It's not just some mumbo jumbo. This is kind of a cheat sheet. So we have a hidden bullish divergence here. So what is a hidden bullish divergence? A cheat sheet I have here. Right here we have the classic or regular bullish divergence. It's when price makes lower lows and our oscillator makes higher lows. But a hidden divergence is when price, the uptrend is still intact, and therefore the trend is still intact. So we make higher lows while our oscillator makes lower lows, and this shows a bit of an overreaction in the price movement. So we have higher lows in price and lower lows in our oscillator. So I have a bit of a description here. So it kind of creates the rubber band effect, and I love rubber band trades. However, like I said before, usually only find them in the hour chart, and they carry much less strength than they do when you find them on daily charts. So basically, the underlying power in the hidden divergence rests on the fact that corrective moves within a larger trend will, at some point, need to catapult themselves back in the appropriate market direction. We can see that the market direction here in the price has definitely been up in the better part of the last year and a half. From a purely technical perspective, which is what I'm interested in analyzing, is that these occurrences show that the indicator reading has generated a larger trend pullback than prices themselves. The indicator will need to revert to its mean in order to stabilize. The necessity for mean reversion often creates a significant snapback, and the added momentum that accompanies these moves is usually enough to bring additional higher highs in an uptrend or lower lows in a downtrend. By definition, this means that the earlier trend is resuming and that the continuation pattern has provided an accurate signal. These trend supportive changes in momentum are sometimes called the rubber band effect or the catapult effect, as they are able to send prices into new higher or lower regions. Conclusion: indicator readings are more than just simply overbought or oversold studies. So let's go from the daily to the 2 hour. Take a look at the pattern that's playing out here. We have this descending wedge pattern that we are starting to potentially break up over. If you want to, I don't know, I think that we're breaking out here in the after hours. We can see that we have a regular divergence as price makes lower lows and our oscillator makes higher highs, or higher lows. So price makes lower lows, oscillator makes higher lows. That's a regular divergence, and we can see it playing out here in the price. But we have formed this nice bottoming action here in the last month and a half of price action here for natural gas. We've been stuck in this range for a long time, and I think that we're coming into a level of support here. This red line, what is this red line? This red line is a major support level that I measured from Fibonacci in recent videos. Let's go ahead and see where this falls. Looks like this falls right at our 38.2% retracement. Let's go from the 2 hour to the 1 hour. So on the 1 hour, I have this red line as hard support. I have this black line as hard resistance. We've been rejected off of it once, twice, 3 times now. And we kind of have this megaphone pattern set by this A, B, C, D, and E. Now, when we rise into this action here, this might come to be our official E, unfortunately. Getting onto the 30-minute chart. Let's see how I did in my prediction last week. My prediction last week, we were right about here, was that we were going to fall down to this level of consolidation and then bounce up higher. Looks like I was very wrong. We went down about another double what my target was, and we came all the way down to the 2.845 range. A lot of stop losses were poked here, but this is extremely irregular, and I think it was caused by the OPEC release last week, where we had this extremely long wick to the downside, this extremely long wick to the upside. This is irregular market reaction, or regular market reaction to a news release like that. However, at the time, I was starting to see what might have been a diamond bottom. Again, we had price come down. We had 1, 2, 3, 4, 5, 6, and then I was expecting us to come back down and have 7, 8, 9, something like that, but we decided just to break out after this news. But as far as the longer term, I have this longer term potential diamond going on here. So this diamond might be a 1, 2, 3, 4, 5, 6, 7, 8, 9. So as far as my prediction for what will happen, we're going to have a 10% move in UGAS tomorrow, and we might even come all the way back up. However, I can see us getting rejected at this hard level of resistance. If we break through this resistance level, I can see us moving way higher. I see us moving to the 3.2 if we get over this. However, I'm fairly doubtful this will happen. But we didn't form much consolidation on our way down, so if we do get up above this level, it would make sense that we would not consolidate much until we come into this level of resistance formed by the price action, struggling around these levels to break down lower before we have this all-out dump to the downside. And you know, I think that we might actually go to about the 3.6 level. Let's do a measured move here. I think that we are flagging out here on natural gas. Ooh, that is a nice flag. Is a high tight flag. So let's just quickly do the measured move. And see where it falls on our higher time frame Fibonacci chart. So let's say that it flags out all the way into market open tomorrow, and then we decide to move higher. A breakout would be at this 2.995. So let's drag this up a little bit, right around the 2.995. And let's go back to our hour. The measured move would fall right at our 61.8% Fibonacci level, and this would make a lot of sense to me. So my thesis as to what's going to happen next week is that we are going to come up all the way to about 3.6, and then we're probably going to move sideways to down for a long time, and then we might see this move up to the 78.6 range in the price action of natural gas. So as far as a technical perspective goes, we had this extreme move up, we're flagging out, and our measured move has us coming to this 38.6 range, which just so happens to be a level of resistance formed by our Fibonacci. So short term, I am very bullish. Medium term, I am slightly bearish. And long term, I am bullish. That has been my analysis for natural gas here today. I'm really looking forward to this move up because I think that the bears have been just shoved down in the leveraged ETFs like UGAS and UNG for way too long now. So that's been my analysis for natural gas this week. Guys, thank you for taking the time to watch my technical analysis. I spend a lot of time on every video, and the support I've been getting has been very encouraging. Each video takes me about an average of an hour to make, from doing the technical analysis off screen to filming it to editing it down to try and take out all of the uhs and ums and pauses, because I know that your time is valuable. And finally, uploading it to YouTube and sharing it to StockTwits to all of you. So if you got anything out of this video, I'd sincerely appreciate a thumbs up and for you to subscribe so you can get my analysis every single week. Also, please comment below if you feel like it, if you have any questions on my analysis or any stock that you'd like my opinion on. Take care, good luck in trading, and I will see you next week. Bye-bye now.